So welcome again. My name is Peter Chege, Head of Product Development and Innovations at AIB Access Africa. For those who are new, AIB Access Africa is a stockbroker at NSE. We are fully regulated by Capital Markets Authority, that is CMA. We are based at Westlands, just behind Westgate, around General Madenge. The building is the Promenade, 5th floor. So that's our location, just behind Westgate, around General Madenge. The building is the Promenade, 5th floor. You are welcome anytime. So I think we can go straight to our presentation today. And if you have any question, you can put on the chat. We'll pick as we go on. And today we want to run through inside global markets. That is first of all, what ETFs are, how they are listed, who manages them, because with that knowledge, it will help you even understand ETFs further. Then stocks, top stocks and top ETFs, then IPOs and where you can get these details. While you can't apply for IPOs directly from Kenya, with that knowledge and with the sites that I will show you where you can get this information, you can position yourself. Once the company lists, now you can start buying those shares. Most of them, they come at a lower price, then you can sell later at a higher price. Also, other corporate actions and dividends. This is on international markets. For NSE, we usually tackle that on every Wednesday. And this presentation, I will share later in WhatsApp channel. I'll share that link for WhatsApp channel and also Telegram channel, where you can just follow. You don't need to join. You just follow the channel. Anytime I do training or any posts, I usually post on that channel. Our WhatsApp groups are specifically for research related. That channel is for training. Where now be training you everything you need to know on international markets. NSE, another investment around Kenya. It's not just stocks. ETFs are exchange traded funds. And as we have done before, they are like a basket of stocks, where instead of buying single stocks, you are buying many in one go. I'll use the same analogy I've used before. You're going to the market to buy fruits. You have an option of buying orange maybe, which is costing around 5 bob. Then you have mango, would be costing around 40. Then you have pineapple, which could be costing 80 bob, a full pineapple. So in total, if you are to buy these three, you are buying at 125 individually. So you buy one orange, one mango, one pineapple. However, you can find another seller who have packaged one orange plus one mango plus one pineapple in one bag, and he's selling around 80. So for single stocks is now where you are buying individual orange, mango, or pineapple. ETF is where you are buying all these three in one bag. So they are packaged in one bag. You are buying that one bag at 80. So treat ETFs as such, where you are buying many stocks packaged as one at a certain price. It could be lower or higher if you are to buy individual stocks. We will see that as we continue. In simple terms, it's funds that trade at stock market. Remember, there are funds that don't trade on stock market, that are managed by professionals. We'll come to that slide. ETFs trade directly from the market. We'll see how they are created and how they are traded and how you buy and sell. So good examples could be like SPY, which contains likes of Apple, Microsoft, Tesla, and more in one, or in one. So when you buy one unit of SPY, you are buying a unit of Apple, Microsoft, Tesla. Remember, international markets, they have fractional shares, and they have physical shares where you buy from one unit all the way up. So for us currently, we are offering physical, which is 1 share to whatever amount you're able to buy. Fractional shares is where you buy like a 0.1 of Microsoft. So in ETF, you might find fractional shares are there and also physical shares. You find a full unit of Apple, a fraction of Microsoft is there, the fraction of Tesla is there. So all those are packaged, you buy as one unit. Another example is Triple Q. Then there is a VTI, which contains most of almost all US companies which are listed. And there is then VT, which gives you now exposure to other markets. These are ETFs. SPY, you have S&P 500, that is top 500 US companies. In Triple Q, it is usually NASDAQ 100. These are tech-heavy indexes. Then we have VTI, as we have said, is US market. Then VT is global stock market ETF. But we'll come to that site where now you can see all this information. So again, we have said ETF, a basket of stocks. But are they actually funds? Yes. They are investment funds, like the ones you see with fund managers or asset managers, just like mutual funds. But instead of being bought through a fund manager or an asset manager, this trades at stock exchange. They are listed, given a security code like the one you have in NSE. They are given a price. Then the people who have already invested in that fund, if they want to move out, they sell, then you come and buy. It's the same thing with NSE shares. During IPO, you buy the shares that have been floated. You become a shareholder. If you want to move, let's say, out of Safaricom, you don't go to Safaricom and tell them I need my money. It is listed at NSE, so that if you want to move, you just sell your portion, then another person is ready to buy and be onboarded as a shareholder. Then you are paid this cash, they have paid. It's the same thing with ETFs. They are listed in stock exchange. So many people put money in a fund. Fund managers, they decide on what to buy in the market. So they can call that ETF, let's say XXX. It is listed so that whoever is within that fund and they want to get out, instead of getting reimbursed their funds, they just sell their portion in the market. So they place a sale order. Then you who is interested in getting into that fund, you buy. So they are paid the money you have bought that ETF with. So ETFs are traded at stock exchange. So there is a term here we have said mutual funds. Maybe most of you don't know what it is. So now, what is a mutual fund? A mutual fund, again, is a basket of investment where many people have put in their money in that basket. Then the asset manager will go and invest in these assets. Let's take an example. Peter, Jane, Mary, Faith, John, Paul. We all put each 1,000. We will have around 6,000 in that basket. So a professional will take these 6,000, go and invest either in stocks at NSE, boards, international markets. It could even be in other physical assets like a RAD or even rental houses. So these 6,000, Peter or Mary didn't buy individual stocks. Then they put their money there. Then a professional is the one to decide where to invest. So imagine you and your 100 friends, each putting $1,000 in a big basket. Then a professional uses that whatever total amount, it could be $100,000 to buy different assets. This is mutual funds. We are not talking about ETFs. So everyone shares profit or loss based on how much they put in. If I put 1,000, I'll be given a profit equivalent to my amount. And this is paid in form of interest. So who manages mutual funds? Most are fund managers. They make all investment decisions on behalf of the client. It's not you as the client who is saying, I want to buy this stock. I want to buy this stock. So they decide which company to buy, when to sell, and how to spread the risks. So you as an investor in mutual funds, you're just putting in your money. Then you let the professionals do their work. They have the headache of investing, managing that portfolio, managing the risks. When dividends come, they're the one who manage them. You as an investor, you don't care where your money went. You only care about the returns that you get at the end of your period of investment. So then how do you buy or sell mutual funds? You buy mutual funds through either, most of them is fund managers, but for international markets now, these are some of the fund managers who manage mutual funds. I didn't want to use the example of Rocco and NSC because today we are doing international markets, but there are other fund managers like Apollo asset managers. There's Kina Britam. Most of insurance companies, they usually have a fund manager. So you don't trade mutual funds like stocks. Instead, you buy them at the end of the price, net asset value. So you just put your money. It is the fund managers who do the other work. And the transaction will happen after market closes, not instant. So when you put your money, you don't get allocation immediately. It's not like the way you buy shares and you can see portfolio. It's not the same way you buy ETF from international markets and you can see that portfolio. For a mutual fund, you only see allocations after the fund manager have done their balancing. Yeah? So they will come and buy stocks at NSC, buy even international markets, then they will come allocate portions within the fund that you put in. So the reason why I went through mutual funds was I'm comparing ETFs with mutual funds, so that those who don't understand mutual funds, at least now you know what ETFs are. They are just like mutual funds, but they trade at a stock exchange. Them, they are listed at an exchange, and they trade the same way we have in NSC. We have ARK Gold. It is an ETF which tracks price of gold. So ETFs are like that, investment funds that are listed and trade at stock exchange. And they trade on real time. It's not like mutual funds. So the difference between mutual funds and ETF, when you can buy and sell, mutual funds is at the end of the day. But ETF, as long as market is open, you can trade actively and you can place your order after market have closed to be pushed the following days. In terms of fees, mutual funds are often higher because fund manager, they are charging you that management fee. There could also be other underlying fees. For ETFs, they only charge a small custody fee, and it is charged on your portfolio. You don't put additional money in there. Remember, your portfolio is making profit or loss. That's where they deduct their fees every day. Then when you're withdrawing, then you get net of the fees. But again, you don't need to worry about that. It's already catered for by the broker. Mutual funds, they are managed by fund managers, while ETFs, they usually tracked via index. Each ETF has its own index. Then mutual funds, they are good for long-term investment because you always agree with your fund manager the period of investment and your return. However, ETFs, you have the control. You can buy, sell anytime, and they offer low cost trading. And it is a cost you already know in advance, 0.8% commission, then custody fee of 0.2%. is that simple. ETFs. 0.8 commission on trading. That's buy and sells. When you buy, you are charged that. When you sell, you are charged that. Then annual custody fee of 0.2%. So then, who manages ETFs? So first of all, before you know who manages, you need to know how they are created. So ETFs are created and managed by ETF providers. This could also be asset managers. It's like, let's take an example of NSE. We say Apollo Asset Manager. They decide they have a fund, a mutual fund that they want to trade at NSE. They just list it at NSE and it starts trading. So they become an ETF provider. So they are the ones who create this fund, get money from investors, invest in various stock. Then they name that collection as an ETF with a name. Then it is listed at NSE. The friends who have already invested in this ETF, if they want to move out, assets, poor assets, they don't need to go and offload everything in the market. They only need to sell your portion. You place an order to sell your portion, then another person comes in and takes that portion. Without them withdrawing the funds they have invested in those assets. So some of ETF providers, and these are just a few. There is BlackRock, also iShare. Then there is Vanguard. These are the top ETF providers. We'll see on that site once I'm through with the presentation. We have State Street and we have ARK Invest and many other. That is on international market. So what do they do as asset managers? They create ETF. They call it, let's say, S&P 500. They give it a name. Then they choose which assets to be in it. It could be stocks. They say, let's in S&P 500, let's put top 500 US stocks. It could be an ETF that is a mix of stocks and bonds. It could also be an ETF for bonds and ETC. So they package it as an ETF. Then they keep this ETF aligned with its goal. It is tracking performance of the top, let's say, 500 US stocks. Then they charge a small fee called expense ratio for doing this. Remember, they are the ones who are managing the ETF. So some of ETFs are passively managed. So they follow an index like S&P 500. Ideally, there is nobody managing it. It's only listed, then it is tracking whatever index. It follows an index. There are others which are actively managed by a fund manager. It's fund manager who picks and chooses the investment. That is, let's say they call these APP. ETF. Fund manager calls it APP. They are the one who decide which stocks will be inside, and they manage those stocks. Remember when we did an NSE stock index, what we said? It's the same thing. Fund manager, they use those stock index to manage the investment and also do things called portfolio balancing, where they check the companies which are performing well outside the index. They bring them inside the index. So the ones which are performing poorly in the index, they remove them just to balance the investment. Remember, they guaranteed you a return, which they have to give you. So it's only good for them to invest in stocks that are giving them value and money. So then how are ETFs listed in any exchange? The ETF providers will work with financial institutions. It could be investment banks or brokers. So they create the ETF fund, so a collection of money but which will be listed at a stock exchange. They define what it will hold. That is the stocks that will be inside there and how it will operate. Once they do that, they register it with a regulator, like SEC in the US. In Kenya, it could be like CME, who regulates capital markets. Then they list it on exchange. It could be in New York or NASDAQ or any other exchange. Once it is listed, it gets a ticker symbol. Ticker symbol is a security code. You see the way Safaricom, you use ESCOM to buy, or Kengen, you use the KEGN. It's the same thing. If it is Kenya Power, KPLC. So it gets that code. Like if it is S&P 500, it's given SPY. So that's the code you as the investor you see. At this stage, it has been onboarded in exchange for the first time. This is called primary trading. For those who have invested in bonds, you know what primary trading is, where new investors comes in and buy a bond. This is the same thing. It is listed in primary trading. Then how are they managed? There are two types of ETFs. One is passive, the other one is active. Passive tracks an index, and they are balanced automatically. Nobody needs to come and readjust. This stock didn't perform well, remove it, put another stock. It is managed automatically. That is, it is the market that determines what stocks get into that ETF and which gets out. If it is performing well, then it will get into the index, and it becomes now the part of ETF. I hope that is clear. A good example, SPY will adjust when S&P 500 changes. If a new counter comes in, then SPY will adjust accordingly. We did this. I will be posting those videos on stock index so that you understand how stocks get into an index and then they are onboarded in ETF. Then we have active ETFs. These are managed by fund managers. It's them who buy and sell based on analysis or strategy. So they analyze stocks, they decide these are good stocks. Remember when we did stock index, I told you portfolio managers and asset managers, they use those indexes to know which stocks are performing better. Then they can group them into a fund. So they manage what is inside the ETF. It could be stocks, bonds, or commodities. They also do portfolio rebalancing, making sure the weights are correct for stocks, so that we don't have a stock that is outperforming others, and there is a stock which is pulling down the index, because now it will affect the whole ETF. So portfolio balancing is the same thing I'm saying. When they realize a stock is performing poorly and it is inside the ETF, they drop it. Then they take another one which was not included and they onboard it. So you as a client, you never know what is happening on the back, because that is done and managed by fund managers. They also handle corporate actions. Those are dividends, stock splits, bonuses. It's them. When a stock within ETF declares a dividend, then they are mandated to include that dividend in returns manually. Remember, for passive, they are done automatically. So then, how do you buy and sell ETFs? So again, ETF, we said, it's a basket, a collection, which you can buy or sell in real time on a stock market. So you go to platform, select the stock you want to buy, select the exchange. If it is NASDAQ, remember most of these, they are cross-listed. Cross-listing means you find it in New York, you find it in NASDAQ and another stock exchange. So you need to be very sure which exchange you are buying from. So you come and place your order, just the normal way you buy stocks. So you want SPY, so you put SPY. Then you check the exchange is NASDAQ. Then I need 100. units at a price, let's say, of $21. And you just click buy button. You get a summation of cost, then you submit. If it matches on the other side, the same way we went through market depth for NSE stocks, you get your ETF. If it doesn't match and you have put a limit order, it is queued. Other people can see it, can see your order. However, you also have an option of putting it as a market where you are saying go and buy me ETF at any price, 100 units. It will just go, and if supply is there, it will just be bought. So you just use your normal brokerage account. On the AIB side, we are not opening a separate account for you. Even when we integrate with DigiTrader, the statement that you get from AIB, you also get a statement for international stocks showing everything. Portfolio, the same thing. Huh? Right now, we are also giving snapshots. So you are using a brokerage account. And they just trade like stocks. Huh? And price keeps on fluctuating. For us who are technical and you like working with graphs, you cannot even a day, there can be very huge price fluctuations, huh? Moves up and down. So you need, if you are buying short term, you need to be on that graph to know when you have made money. But if you are buying long term, then you don't need to worry a lot. Huh? You only need to check frequently to know whether the prices are going up and you're making profit. Huh? So when you buy ETF, you don't buy from a fund manager directly. You don't go to, let's use a local example, Apollo Assets. You don't go to them and tell them, I want to buy this fund. You are buying from another investor who invested through Apollo and they want to get out. Huh? So there is already an investor who had put money within that ETF. When it was listed, they want to get out. So they just sell in the market. Huh? Then you come and buy. Imagine a scenario where it's not listed in exchange and you want to move out. Take an example of Mansa X and you want to move. It means the fund manager, either they use their balance sheet or they have some liquidity on the side to pay you, or they go and offload the whole fund, because they can't do it partially. But here, they are listing it to exchange so that they are not mandated to go and look for another investor or to offload the whole fund to pay you. They're just listing so that if somebody inside that fund wants to get out, they just sell their portion. Then you come and buy. So the exchange, you just match orders, just like the way it works in stocks. Huh? With the seller at market price, it will execute. If it is limit, then the market trading rules. Best price first, matching price executes. Just that, simple as that. Huh? And when you sell an ETF, you sell it to another buyer on the exchange. Huh? The ETF provider is not the one who buys it back. Huh? So them, they are not incurring any costs. The fund that they invested keeps on accumulating gains. Huh? You're only exchanging who is inside, who have bought a portion of that ETF. One wants to get out, one wants to get in. So this is where we call it secondary market trading, because now you are allowing other people to trade. Huh? And prices are transparent, and most of ETFs are more liquid than stocks. Liquid means as a buyer you can get a seller, and as a seller you can get a buyer. If you look at NSE, some stocks you find, yes, there is demand, but there is no supply. It is zero. On market depth, the side of ask is zero. There is nothing. Then you find another one, it has both buyers and sellers. So liquid stocks means the side of bid have orders and the side for ask have orders. If one side doesn't have orders, it means if you're buying, you can't get a seller. If you're selling, you can't get a buyer. So liquidity means there is already a counter trade for your order. if you match the price. So an example, just in layman, let's say you want to invest in SPY, which tracks S&P 500. You just go, once you integrate with DigiTrader, you just go to app. For now, you just tell us, I need SPY on email and I need this quantity. You then on the app, you just search for SPY. For us, we just go to the platform, put in SPY, which exchange it is, then just put details and click buy. The order matches with someone who is selling at the current price, and you are now a small share. You own now a small share of 500 top US companies, which are within SPY. And this is automatic, because transactions, once they execute, one gets money, one gets shares immediately. And when you're ready, you can sell it anytime, just like any stocks. So a summary of ETF. 1, it's a fund made of many assets like stocks. It is managed by ETF providers, and it trades on a stock exchange. And you just buy the same way you buy stocks through a broker platform. And prices keeps on fluctuating every day based on market demand and supply. And you are buying from other investors. You are not buying directly from a fund manager. And liquidity, it's very easy to buy and sell anytime, as long as the market is open. So that is on ETFs. If you have any question, you can put on the chat. Let's go to top ETF providers. We will come to that platform after I'm done with ETF providers. Where I will show you tools you can use now to research on international markets. We have BlackRock, iShare. Asset under management is 3.49 trillion. Asset under management means the total portfolio valuation they are managing. It could be bonds, stocks, and any other asset. If you are to give them a total value, you see the way you got portfolio valuation on your account, and you see the total you have in shares. That's what is called asset under management. The total value of the stocks or whatever asset they are managing. And for them, they have around 465 ETFs. And iShare is a BlackRock ETF brand. And they use both index tracking, that is a passive. Remember, we said there is passive and some are active. They are managed by themselves. There are those which are just listed at exchange. Some of ETFs that they have is IWV, S&P 500. Then you have IFA for developed markets, and AWG for US bond market. So they cover US, global, emerging, and fixed income, and they are fund manager. Then we have Vanguard, again, asset under management. You can tell this is a solid fund manager. Why then do you need to know asset under management? So that you know the weight of these fund managers. It could be a new fund manager who is getting in the market. Do you want to take risks? But now with asset under management, you can tell whether they have a solid base to handle your investment. ETFs, around 94. They operate, most of them, they are passive indexes with extremely low fees. Some of ETFs, there is a VTI, total US stock market. Then VOO, that is S&P 500. So in the stock market, you see VOO. For BlackRock, you see it as IWV. So when you're buying S&P 500, you always check the code because it will tell you who is the fund manager. Then we have markets covered, US global, then there is boards and developing and emerging markets. Again, they are fund manager. Then we have State Street. Again, asset under management 1.5 trillion, ETFs 160. They are known for launching the first ETF, SPY. So SPY belongs to State Street. I think this is what most people are used to, the S&P 500 SPY. They focus on large institutional products. So some of the top ETFs, we have S&P 500. This is the most traded ETF. So if you have bought SPY, it is from State Street. Then they have GLD, Gold Trust. Then XLF, financial sector. And this GLD, don't confuse it with what you see on our platform for NSE. For NSE, it is ABSA Gold. It's not this one. Then market covered, US. Then there are sectors, commodities, and global indexes. Again, they are also fund manager. And I've said the ETF that you have seen, S&P 500, if you have ever bought SPY, that belongs to them. In S&P 500, you can see it's also listed as a VWO and also IWV. Another, it's only that I can't be able to put all of them. There are over 400 ETF providers. Each has its own name. Then you have Invesco. Again, they have 235 ETFs. Top ETFs, we have WQ that tracks Nasdaq 100. It's tech heavy. Then you have the other two. One of them, PEY, that have a high dividend yield. Market covered US and other sectors. Again, they are also fund managers. These are just a few of them. Then we have come to top performing global stocks. We have seen ETFs. Here we are talking about shares. Shares is where you buy ownership of a company. If you are buying one share of Apple, you have one portion of ownership of Apple company. I'm talking about Apple company, not Apple iPhones or the other gadgets. It's the company you are buying ownership. Just like the way you buy shares at NSE. It's the same thing you are doing here. Apple, maybe one time they wanted to raise capital to do something, maybe an innovation. They listed at their stock exchange through IPO. So you as a shareholder, you came and applied for IPO. So their shareholder wanted to offload part of their shareholding. So you came and bought it. You became a new shareholder. So you are part of shareholding. So those are shares. It's not ETFs. Here you are buying single stock. So some of the top performing stocks, and these are just examples. When you come to that platform, you see so many. We have king of iPhones. It's Apple. It's undisputed. I don't think I've ever seen any other company competing with Apple. It's not like Android, where you have so many companies building their own phones. Then we have NVIDIA, powering AI and gaming. This is the most common stock that you see traded a lot. And it fluctuates in price. That's why when you go to our stock recommendation, you won't see us recommending NVIDIA for short term. If you are to recommend this one, we can only recommend on long term. And again, you need to also keep on tracking whether you're making profit. And it's one of stocks that you can make very huge profits. For those who have already invested from the time we started, they already know NVIDIA is the king of stock exchange or stock exchange. It's performing very well, but I think it's because of AI. Everybody, I think these days, either you are using ChatGPT or you're using Google's platform. And I think there is also Gemini, and there are other AI platforms that are coming up. Maybe you have ever seen your kid, when they're given homework, they go straight to ChatGPT. ChatGPT uses AI. They also do They are called graphic cards for your laptop. If you use a gaming laptop, they usually have that graphics card. If you open a desktop, you can see that graphics card. For laptop, you need to open on the other side. That most of the graphics cards, they come from NVIDIA. If you look at your laptop at the top, you usually notice this name, NVIDIA. It means the graphics card in your laptop came from NVIDIA. And most of laptops these days, they come with that graphics card. So it can tell you the power they hold. Then you have Amazon. Anybody who have ever bought anything online, you must have come across Amazon. You also find most companies, they are hosting their data in cloud with Amazon. So Amazon have provided servers where you can upload documents remotely without you owning a physical server. It's them who have that server. That's what is called cloud hosting. So these are some of top tech, some of top stocks that you can get with just a brief of what they do. And that's why I said these are top performing. Like Apple, they not just do iPhones. They also have services. They also wearables is like those watch that you see have are able to communicate with your phone, and you can even receive messages or even make calls. Then there is our ecosystem. Then you have NVIDIA. Again, we have said they are the brain behind AI and also graphics card. Amazon, AWS for cloud hosting, and then shopping. So before we come to IPO, let me see if there is any question I can pick. I have stocks in my portfolio, but when I try to sell them, it tells me stock not available, yet I see them. It's because you have bought, I believe this is on NSE, you have bought them within the last 3 days. For you to sell, you have to wait for the stocks to settle. That is, if I buy today, it's a Friday, I will count 3 working days, Monday, Tuesday, Wednesday. Wednesday, 5 p.m., that's when settlement happens. Your shares are released. So you can sell them on Thursday. That is by regulation, it is not AIB. T plus 3. So you just check the last purchase you did. Check that date, add 3 working days. You can only sell the following working day. That is on NSE. And let's meet Wednesday so that now I explain these in details. ETFs, currently we don't have international stocks on the app. We are working on that. Right now we are trading through our desk. You open account, you give us order, we execute for you. Then you'll be able to share reports with you. Fractional shares together with trading on app is coming very soon. We are working on that. It should be in a few, let's say 2 months. So that I don't give a promise that you'll not be able to deliver. Within 2 months, it will be there in the app. Difference between index and ETF. Index is used to track performance of an ETF. So ETF have shares. Then there is that index that is used to track performance of those shares. I hope that is clear. Okay, thank you, Ibrahim, for that clarification. So I think let's continue. So then how do you track and invest in international markets? One of them is using upcoming IPOs. These are new opportunities. There are sites that tell you upcoming IPOs and when it's getting into stock exchange. Remember, this is a new company that is getting into a stock exchange. While you can't get into IPO from Kenya directly, you can wait the first day they list. You can buy that stock or ETF. Once you buy now, you track the price movement. If it is going up, set your target price. You can exit by selling, but you don't need if the stock increases in price. So always check for IPOs, upcoming IPOs. And there are so many sites like Yahoo Finance is one, but I'll show you another one, a different one. And you can always invest, like now AIB Access is offering these. So an IPO is when a private company sells shares to the public for the first time. Just like the way we have NSE, where Safaricom came and listed their shares at NSE through IPO. New investors came in, bought, applied, they were allocated shares. So that's what is called an IPO. The first time a company is listing at a stock exchange. So there are so many sites. I will show you one that I usually use that gives you upcoming IPOs. And you don't need to invest at the launch. You can just wait, see how it performs, then you can buy. So then there is dividend calendars and quarterly income. So most of the companies, they pay dividend, and they usually, on the site I'll show you, they usually have even how frequent they pay. So that you as the investor, you know what time to expect your dividend in your trading account. Remember, in international markets, they are not paying you directly. It is put on your trading account. You can withdraw or decide maybe to buy more shares. And remember what we said with NSE share trading on Wednesday, compounding and dividend recycling. Compounding is where you are using your dividend to buy same stock that gave you that dividend, because you know next time it will give you dividend. So you are compounding your dividend. Then recycling dividend means you are buying a stock that have given you dividend. You get that dividend. You look for the next company that is offering dividend. After you get paid, buy that company before book closure. It gives you dividend. You look for the next one. You buy with that dividend you have received. So you are using a dividend to buy another dividend, and you continue like that. Eventually, you have grown your investment with dividends. Dividends are mostly like a company is giving you share of their profit. So you just hold your stock. You don't sell the stock. The company is just paying you some money, but you have not sold anything. And there are sites that usually have that calendar. We've come to that. So that you can plan it by before book closure. Then there are other corporate actions on international markets. Same thing we have at NSE. NSE corporate actions are usually on price list. For international markets, they are usually listed on some of these sites. Some are paid, some are free. The ones that I will show you are free. I don't want you to incur any cost. Remember, even for our trainings or any other trainings I conduct, there is no charge. So why then pay to get that information? Unless you feel that you need that is outside what those sites, what access gives. So one of corporate actions is a stock split. There is usually forward split and reverse split. Forward split is where you are multiplying shares. Reverse is where you are reducing. So like you can say for every one share, you multiply by 4, but price goes down by 4. Reverse is where for every 4 you're dividing, you convert it to 1 share. So the price then multiplies by 4. These you will not find in NSE, these you find in international markets. NSE you only find a forward split. Merger is where 2 companies merge to form one entity. Then there is acquisition. Acquisition is where a company acquires another company. So for a merger, you find either those 2 companies, if they don't want to change the name, They continue listed separately, or they combine into one entity. Then they start trading as one entity. Acquisition is where the company is taken over by another company. They can decide to continue listing at exchange or delist that company completely. Then there is the rights issue, where as a shareholder, you are entitled to more shares at a discount. So a company wants to raise additional money. They are already listed at NASDAQ. They can't list again. So what they can do is to offer additional shares to existing shareholder at a discount. So you pay a small fee for rights issue, let's say SPY rights issue. But then when this rights issue is listed at NSE, it converts back to shares. So it doesn't trade as SPY rights, it trades as SPY. So your shares are added. As a shareholder, you can either take those rights, denounce them, or just keep quiet, you lose them. Denounce, you sell in the market. Take them, you pay. So corporate actions will usually have will affect stock price and your investment. Like in split, you get more shares, same value. So the price goes down, but your shares increase. Remember, in the other reverse split, it's the opposite. It makes the share affordable to other investors. That's why most of the companies do splits. Mergers, two companies become one, and the price can move up or down. Then there is the right issue, where a company lets you buy more shares at a cheaper price. But again, you need to be very careful when buying a right issue. So what tools can you then use to track stocks in events? There are apps, Yahoo, Finance, TradingView, Invest.com. These are sites. There is the stock analysis, all these MarketWatch, NASDAQ. And some of them allows you to set alerts for news and dividends if you have a pro account. So they will act as your assistant in investing. Remember, you need information to make decisions. Some of these sites you also find they are research analysts who have already done their research, and they are ranked based on how users rank them. So let's go to one of sites, stockanalysis.com, one of the best sites, and it has everything you need. They have gainers, losers, market news, and what we have said, IPOs. Like now, all these IPOs, I think they were in this month. Then there is upcoming IPOs. So let's go to the left, and we start with stocks. We see what you can do. You have a stock screener. So when you click on stocks, it will give you all stocks which are available on this site. I think there are so many. If you look at it, has around 11 pages times 500. That is 5,000 stocks. I hope you can see on your end. It gives you the symbol, then the company name, and the industry it is in, and market capitalization. That is the total valuation of this company. Number of shares times closing price. That's what is called capitalization. You have stock screener, where you can see the companies that are giving dividend, the dividend and their dividend yield. Why do you need a dividend yield, if I may ask? Why do you need dividend yield? When buying stocks, you need to know your returns. Dividend yield tells you how much money a company pays you each year in dividend compared to its stock price. It's like a percentage. So you take that dividend, you divide by its current price times 100. It's a way of measuring how much income you'll get from owning the stocks. Remember on Wednesday when we were doing NSE, I promised there is an Excel spreadsheet that we'll share over the weekend on how to manage your dividend. Why? You need to know when you're buying that stock, whether that stock will give you good returns. So let's think of dividend yield like when you're putting money in your savings account or in your circle and they tell you that they'll give you 5% interest. It's the same thing you are comparing here. A stock that gives you a 5% yield is just like that savings account that is giving you 5% interest. So it's like it's paying you 5% of its price each year. So if you hold that stock for some time and you continue accumulating your dividend, you might find it has paid you more than you invested. I hope now that is clear. So what you can do when you're using this site, always arrange by dividend yield so that you see which company gives you higher dividend yield. Then this one way you can decide on which stock to buy. There are all these. So that is on dividend yield. Then you can also check frequency. We said there are those which pay semi-annually, there are those who pay quarterly. Semi-annually it's 2 times a year. Then quarterly is in 3 quarters, 12 divided by 4. Those are 3 dividends you'll be getting in a year. So that the first dividend, like from Nvidia, for the first quarter, you can use it to buy another account, Microsoft. Then when you receive a Microsoft dividend, you buy Apple. You continue like that if book Russia within the date. So one pays you, then you look for book Russia for the next one. Buy. You get another dividend. So if you're accumulating your dividend. Again, look at the dividend amount. So that when you're making that decision, you know the amount that will be paid. I'm looking for one company. Let me see if we can search for it here. Nvidia. Let me arrange with frequency. We just see Nvidia. Where is it? Dividend is a 0.04. But if you look like Microsoft, they're giving you $3. So you only need to multiply that with the number of shares you have. Less withholding tax. That's the amount you get. So this is where you get dividends, dividend use, and their frequency. That's the only thing you need. Unless you want to go into details, then you check market capitalization to see which is a stronger company. Like Nvidia already overtakes all of them, Microsoft. So you already know these are strong brands. One that has a higher capitalization. We said capitalization is the total number of shares in the market times the current price. And again, at the stock screener, if you want now to go into details to know whether they are making profit or loss, you can go to financials and you can open these and see what they are making. Whether they are making loss, because if a company makes loss, then you don't expect to get a dividend. You can also get valuation for those companies. For those who are more technical, you can even get price to expense ratio. Then, very important, and I know this is what most of you would want, recommendations. Again, from stock screener, you can just go to analysts and see their ratings. What are they rating that company? Like of yesterday, because market have not opened today, Nvidia is a strong buy. Done by how many analysts? 43. Microsoft, again, strong buy. Done by how many analysts? So you are able to tell. Sorry for that. So you are able to tell based on the analysts whether you can buy Nvidia. Like if you are to look at these two stocks down here, Berkshire, it's only two analysts who have given a buy. So why would you buy a stock that is given a recommendation by two, yet Nvidia you have 43? It means Nvidia have more confidence in terms of research, and they are giving you price target. This is what I was saying. When you're getting into a stock, have a price target when you want to exit. Currently, it was 159 at the stock price. Then all these analysts have told you target a price of 176. So you can buy at 159, hold that stock, wait for it to go to 176. You have gained close to around $17. It's not free money that you can get at NSE that easily. Look, even Microsoft. Now these stocks, they look expensive. You can buy now fractions, where you buy a fraction of Nvidia to be at a lower price. So that's what we call fractional shares. They will come to DigiTrader. So you can also analyze this with analysts, see which of the stocks is where most of the recommendations are, and you can now decide on which stock to buy. There is Meta. Meta owns for Facebook, WhatsApp, Threads, and Instagram. And you can see it is a strong buy. At what price? So when you buy your Meta, you can always brag to people you own Facebook, because you become a shareholder. We are dealing with physical stocks, not CFDs. If you are buying CFDs, then you don't have ownership. You're only speculating on price movement. You don't own the underlying stocks. Here we are dealing with full stocks, where you own the underlying company. You also have Google. You can see it's also a recommendation. So Google, Nvidia, Amazon. You have Meta. Do you have any other that is common? We have Tesla. Then there is Apple. There is Uber. There is also PayPal. Some of these companies, even if you have never heard the names, they are strong companies. PayPal supports payment gateways. For those who have done online jobs, you know. Uber, I think that one I don't need to explain. It's already here in Kenya. The taxis and also delivery. Is that Uber that is listed here? Uber in Kenya is just a brand, but it's owned outside Kenya. Then we have all these stocks, and there are many, as you can see. 275 now you multiply with the 20. Those are the stocks which are there. And you can see performance of stocks, how they have performed. Current price, whether it has increased in price or not. So all these you get at the stock analysis. Then you have stock exchanges that are there. Again, for us, you need to confirm from our side. Mostly it is US and some of other stock exchanges. So if you want anything outside US, always get in touch. Then we have, you can use comparison tool where you're comparing to two stocks. Earnings calendar, the estimations, when the companies will release their results. Then you can also group by industry. So if you're interested in an industry, you can see how it is performing. I won't go through these others. They are analysts. You can see even whether they are analysts you can rely on. And if you click on that analyst, it will give you now additional details, what some of the recommendations they have done. Don't be worried about these graphs you see. These graphs only gives you the trade. If it was a CFD or Forex, that's where now you need to worry, because then you need to narrow that graph. For stock exchange, you only need to track price. You can see the recommendations they are doing and the companies they are doing for. And these are not Kenyan analysts. Top stocks, these are top picks. I don't want to go into details. Then we have corporate actions. This one you get announcements for the company. It could be listing of new companies, like all these are new that have come in. And you can position yourself. You only need to check which exchange. If you click on one, it can give you even more details, including the exchange. Exchange is this one you see here. You see where I've highlighted NASDAQ. That is the exchange. Just below the name of the stock, the first thing is the exchange. You need to know that. Then the code, EMPG, then the price you want to get in with. As you can see, this is a day graph. You don't need to panic. You know, if it was Forex, you'd panic because you know you are losing. In stocks, unless you sell, you don't lose. If you do a 5-day, let's see whether it will change. At some point there was a spike. So somebody who bought here July 2 could have sold on July 3 and make how many dollars? $2. But you don't need to sell. Even if it is going down at one point, it might go up. This is a newly listed stock. When they are down, that's when you buy. Then you sell when they are high. Let's see whether there is any. I don't think there is a stock which may be common. Then you can see those stocks which have already delisted from exchange. That is, they have moved out, maybe through acquisition or themselves they decided let's delist. Then splits, where a company doing splits, like there is a reverse of 1 to 20. Then there is the one APG with a forward 1.5 for one share. So for every one share you get 1.5. So that's on splits. Changes, I think it's the change in name. Companies which have changed name, but they are listed. This you need because when you're buying or selling, you need to know the new name. There are spin-offs. Then there is those ones which have been declared bankrupt, then acquisition, they have been acquired by other companies. That you get other stocks. Then you have IPOs. You have IPO calendar. You can see upcoming IPO and you can position yourself to buy those stocks when they list back. Like all these are in NASDAQ. I don't think there is any other IPO after that. Then you can see which other here, IPO news. Those are just news. Recent IPO, these are companies which have just been listed. We have seen that at the stocks. Then we have ETF screeners. This right now you can be able to see the ETFs. The ETFs that are listed, again with the symbol, the fund name. Remember, ETF is a fund. It's only that it is trading at exchange. Then whether asset class is either equity are shares, a bond, which is fixed income. It could also be as a bank savings. It could be any other asset. There are so many assets, a fund or such. And it gives you the total assets under management. Then its price and whether it is moving up or down. And how many stocks are listed. Remember we said an ETF have stocks inside. Like S&P 500, it has 509 stocks which are listed. If you click on this view, then you see the details of that ETF, how it is performing. And in one day, how it have moved, 5 days, you can tell it's moving up. If you got 1 month, you can tell it has been. So there's somebody who would have made around $25. They entered in June through this VWO year to date. And the reason why this graph is not like Forex, remember these are shares. You are not selling. It's not like Forex or CFD where movement of price affects you directly. Yeah, it doesn't affect you directly until you sell. Within that ETF, you can be able to tell the shares that are there, the holdings. All these are the ones which are in the VWO, and S&P 500. All these are the stocks. Why do you need these? We have some of us who are limited by our religion in buying some stocks. Before you buy an ETF, you can open and see which stocks are within that ETF and decide whether you want to buy or not. Also, you can see the dividend yield is there. That is, we have seen that earlier. The total annual dividend is around $6. So that's like, if you have to do, it's roughly 700 and something Kenyan shillings for every one share. Ex-dividend date. This is the most important. That's why I said these screens are very important. You got a dividend, you check ex-dividend date. So what is ex-dividend date? Ex-dividend date is 1 day after book closure. I've said this before. Book closure is the date you need to have shares. So on June 29th, anyone who had a VOO ETF qualified for dividend. So you needed to have these shares on June 29th. In international markets, you not find the word book closure. You find ex-dividend date. So for you to qualify, it's 1 day before. In NSE, it is straightforward. Book closure date is when you need to have shares. So have that in mind even in international markets. Book closure date is when I need to have shares. The total I have that at the close of that day. So you go and check ex-dividend date minus 1 day. So if you bought including that day 29th, you qualify for dividend. And you can see they pay quarterly. Then you have payment day when you'll be paid, when that money will be posted in your account. And you can see history. I don't want to go into details. You can do these on your own. I'll share all these with together with the presentation on our channel, WhatsApp channel. I'll give you a link at the end of these. And as we said, notice S&P 500 has 3 ETFs you can see, but different names. That's why when you are buying, you need to specify. So when you are placing your order, be sure about the exchange you are placing your order in. Then you can use comparison to compare ETFs. Then new ETFs that have been launched, again, to position yourself. And you can see the fund name. We said an ETF is an exchange traded fund managed by an underlying fund manager. Then we have ETF providers. You may want to know who provides certain ETFs. If you go to BlackRock, we saw these. We said they have 465 listed funds, and they are here. All these. So when you're buying, you may also want to know who is the provider of that ETF. So that is stocks, IPO, ETFs, and corporate actions you are seeing. It also have news, which you can maybe brush through to see if there is anything that have been put there out concerning the stocks that you want to buy. Remember, news have potential of affecting stock or even ETF. Trading, you can see the most trading stocks for the day, so that even you, if you don't know which stocks to buy, you can come and make decisions from here based on what other people are buying. Then we have articles. These are just articles on that have been done by the providers of these websites. Again, you have technical charts for those who want to do technical analysis. Just pick a stock and you get that graph, and you can play around with it. Even zoom out, like the way we do with Forex. These are not candlesticks. And you can change here anything you want. I don't want to go into details. So let's go back. So that is on technical analysis, market movers, market news, And again, I said they also have a pro account, and you can create your own watch list. So this is one of the best sites. That's why I won't go through the others. There is another one that is called Nasdaq.com. Let's see. Nasdaq.com. It's also a good site, but these are for insights. You can come and pick stocks and just brush through. Again, similar to what we have on stock analysis, but these may have more news. If you notice, and it covers Nasdaq. So let's go back to our presentation. So then, you want to build your portfolio globally. Then how do you do it as a smart investor? Do a mix of stocks. You buy US, Europe, Asia ETFs. Again, as we said in NSE, always diversify your portfolio. Don't be in one sector. What happens if there is war in the US? It means if stocks are affected, then you're affected. So always diversify. You have stocks in NSE, go to US, go to Europe, go to Asia. Diversify, because even price movement also matter. Then, and this is what I usually advise, if you don't know which stock you want to buy in a dividend stock. That is a stock that have declared dividend. I'll be sharing these Excel spreadsheets, even for international markets, on that WhatsApp channel, so that you know stocks which are offering dividend. They are good buys. Strong. I don't know how many strongs I can use. Buy. Why? This stock is giving you free money in terms of dividend. Come and return that dividend in. Buy another dividend stock. It gives you a dividend. Continue like that. You will not even notice how you grew your portfolio to over 1 million. Just with dividends. At some point, buy growth stocks. Growth stocks are those stocks that don't give dividends, but they have potential of growing price. But remember, at the end of it, you need to sell to realize these gains. It's not like dividend where you're being paid. Capital gains, you have to sell that stock. You have to actually sell. For dividend, you don't sell. Stock is there, you are receiving free money. For growth stocks is where they appreciate in price, then you can sell when it's high. They're usually good for short-term investment. You buy low, you sell high. Why do these companies fail to pay dividends? They use that profit to reinvest. And when they reinvest, then remember, prices may move up. Then something we have never seen in NSE, hopefully it can come sometime, maybe later, is stop loss. Those who are in CFDs and Forex, you know stop loss orders and take profit orders. What does that mean? Let's start with take profit. Is where you're putting your order. In the screen, you put a price of 140, but you say when this price reaches 170, automatically sell my shares. Why? I take this profit of that. That happens in Forex and CFDs because you don't know which way the prices will move. You want to take your profit early before it fluctuates down. So when the stock price hits 170, automatically sell. It's one order you are placing, a buy order, but you're telling the system, also place a sell order. When that price reaches, just automatically sell my share. Now stop loss. Counter is making losses. The same thing with Forex. If it is going down, you are losing money. You tell the system, I don't want to take so huge losses. If I'm buying at 140 and the price continues going down after I buy, if it reaches 120, I automatically sell my shares so that I don't continue making losses. That happens in Forex and CFDs because you don't know what happens later. But for stocks, we highly discourage this unless you anticipate that counter can fall. That's why you never find in our forms asking you to put in stop loss orders. But they are there. That's what their purpose is. Take profit. It means when my price hits my target, sell. Automatically sell. However, if the prices are going down, don't let me take more losses. Automatically sell my shares. I take it. Then I can use that money to buy a dividend stock. Then when I receive dividend, it will compensate for that loss I made. But that's mostly on Forex and CFDs. Because those are risky products. You don't want to take more risk. Remember, as price goes down, you're actually losing that money that you can see there in CFDs and Forex. For shares, unless you sell, you can stick with the share. But if you notice the company, the performance is not okay and prices are going down, you can decide to take loss. Now think at this portfolio. Maybe you may ask, what is this portfolio? ETFs, like your main crops. They are solid and they give you steady food, like just the maize that you plant. Then dividends, take it like that fruit tree. You just plant once, but it gives you other fruits. You just plant one tree, every year it will be giving you free fruits. So you are getting regular cash. Growth stocks, it's like the exotic plants, which you just plant. When they grow, you sell at a profit. You cut everything, then you sell. I don't know which example to use of exotic plants. I'm trying to think. Because every plant you put on shamba gives you an extra. Like if it is maize, yes, you harvest maize, but you have that plant you can give to cow. That's a dividend. So, and with that, I want to go to Q&A. Let's go to Q&A. What's the name of website? It's stockanalysis.com and there is nasdaq.com. Let me just share this link for stock analysis so that if you want to go through it, let me share on this chart. That's one, but you remove the chart because it will go straight to the chart. Forgot to, let me just copy the exact site. And you don't need to register, they are free sites. Let me reshare again for stock analysis. There we go. Let me also share the WhatsApp channel link. Because this is where I usually do even blogs, detailed blog posts. Then I share. Because there, you want to listen to the video which I'll post on YouTube channel. Again, the links will be in that channel, in that WhatsApp channel, in Telegram channel. Once you find a video, you may want to know in details. So that's why I'm doing a separate blog post. It's not related to AIB, so you find the name is My Wealth Guide KE, where now I share personal insights. Let me share Telegram channel. The reason why I'm sharing also Telegram channel, it is linked to Telegram group, which now you can, if you want to join the channels you're just following. In the Telegram channel, you see when I post, you may want to comment on that post. It will ask you to join a group where now you can have some discussion, but there don't share your personal details at all. If you need to share your personal details, reach to me. Let me go to the first. I don't know whether this slide has my number. Let me check. It doesn't. Let's go to the very first slide, so that you can pick my number. It's there. Let me also share on my WhatsApp number 0723284775. That's my WhatsApp number. You can reach out anytime. Trainings are free, even if you want separate training on your own. I don't charge. We don't charge. We is AIB, we don't charge. I also don't charge. It's free. It's free. So the other question is, Dividend yield helps investor to tell if a company is giving good returns. Good. Nvidia seems to be overbought zone. Why recommend a buy for now? Nvidia, again, as I said, AIB, we are not recommending because it's highly volatile. Volatile means price can move in any side. It can move up with a very huge margin. It can move down with a very huge margin. So this is a stock for speculation. We are doing it for speculation purposes. But it's not overbought zone. Remember, overbought shares, they have high liquidity because these people you sell at one point. If you buy a stock that doesn't have too many shareholders and you own that stock, who will you sell to? Remember, investors also check. Most of international stock investors, they check even the number of shareholders. You can tell from asset under management. You can tell whether when you buy it, you'll be able to sell. But Nvidia is highly liquid, but very volatile. So highly liquid, you can get buyers and sellers, but very volatile in terms of price movement. You can make money, but you don't lose until you sell. So even if the price goes down, just hold on that stock. Remember, it is giving dividend. For international stocks, ETF, what taxes apply? Taxes is on dividend, and it is deducted at the source. At the source means the person who is paying, that is their registrar, or if it is fund, it is the fund manager. So it is deducted before being posted on your account. What does that mean? You don't need to worry about tax. You are getting net. It's them to file those tax. KRI is nowhere in this platform, even in stocks. Even for NSE shares, dividend deducted by registrar, they pay KRI. It's them who file, it's not you, unless you want to declare. But when you declare, who paid for it? You need a registrar's PIN to file. So you'll be putting yourself into trouble. Remember, registrar will pay and file. So why declare? It's like you are trying to do double. That I would maybe call it double taxation. Registrar have paid, you have declared. Who have paid? It means you have to pay. You have a liability. We don't have capital gains tax. I think CASIB, they worked on that. Again, you are subjected to our Kenyan rules, not international stocks market. You're not subjected to US. That's why you need to fill in W8BN form, just to tell US government that you are not a US citizen. As simple as that. So no taxes you need to worry about. They are deducted at their source. I think Rina have explained. Then I'm 19 years. I was looking into investment banking. I would like your thoughts on it. Yeah, it's a good career. Remember, we in Kenya, we already know, NSE a lot. When you get international exposure, you realize NSE is just a small bucket. It's a small bucket you are carrying. There is a huge bucket out there. And investment banking, it usually have stocks, it has boards, it has funds. That is stocks, boards, funds. It also have derivatives, forex, CFDs, and many other products. It's a good career if you want to get into it. Just do a good degree, a BCom, Bachelor of Mathematics, but when you get out there, do an optional certificate. When you get into stock exchange, if you want to be a trader, go to NSE. They usually do training which are certified. You can check on NSE website. You become a certified trader. With that, you can get a job within NSE, or you become an investment advisor. There is a reason why I've said investment advisor. They are the highly paid people in the market. because it is your work that pays you, the number of clients you bring in. And then 19, you can still invest even from 1 year, as long as you have a birth certificate. You can open an account, but for minors, it's the parent who manages that account. So let's continue. What if one has ETF in tech? Is it okay if investing long term, say 5 years? Actually, Evans, when you buy, never give a period I will sell at this point. You just buy, you're buying stocks to be there. When you need money urgently, that's when you sell and you look at the stock that you are selling, whether you have made profit. Immediately you say, I'm buying to sell in 5 years. What happens those 5 years? The stock is down. You make losses. You buy dividend stocks, hold them forever until such time when you want to sell. Otherwise, you can pass these assets to your beneficiaries. I covered that last Wednesday. I'll share that slide with a video so that you understand how you can pass your wealth to beneficiaries. Beneficiaries means all of us will not be here forever. When we pass, they are our children. There are processes which you need to ensure very early you go through them so that you don't leave your children hustling to get your investments. It's always good to secure your investment so that it goes to the right people. That is appointing beneficiary. If you have an M-Pesa number, you already know what beneficiary means. You had somebody who, in case you're not there, they will be paid for that. Yeah, all these stocks, liquidity, let me just confirm with, but liquidity is just mostly it's orders which are there. Let me see if they do it explicitly. They tell you whether this stock is liquid. I'm just checking through whether there is anywhere you can get that word, because then it will require you to manually do some checks. Liquidity means if you are buying, there is always sell orders. If you are selling, there is always buy orders. But you can always tell with the market activity. I don't think they usually state that. But there are many sites out there, but you only need to be very careful. You don't go to a site and maybe they're just taking advantage of you and give you wrong information. I'm trying to see if there is one. Yeah, in terms of volume, unless you go through volumes, you see how many, the number of shares which have traded. Also, if you are to compare ask and bid price, the top, the difference between the two is called spread. The higher the spread, the lower the liquidity. The smaller the spread, the higher the liquidity. Spread means the difference between the buy and sell price, the top ones. The narrower it is, the high liquid stock is. The higher it is, then it means there are no people willing either to buy or to sell within the lower prices. And before you call a stock a liquid, there are so many other factors you check. I don't think there is any which states explicitly liquidity, but I'll check in the next presentation or even on that channel. I'll let you know how you can tell whether a stock is liquid. I bought shares worth 2K. I buy stocks worth 2,000 every month on NSE. In 10 years, where would I be financially? Let's do simple mathematics. We have 2,000 every month times 12, that's 24,000. In 10 years, that is 240,000. That is not the figure that you have. I know there is somebody who went to calculator to do that, and you got 240,000. That is 2,000 times 12. That is 24,000. Looks a very small amount. In 10 years, you have 240,000. That's not the figure that you have. It all depends on who you are as investor. If you are looking at dividend stocks, you might even get out with 2 million here, because dividends are coming in. Return that dividend to buy another stock. Actually, this is one best way of doing it at NSE. If you don't have that huge income, don't wait until when you reach 100,000 come and put that 2,000. If I was to show you my portfolio, you would even be encouraged. I usually buy very small shares, 100 shares. If I see on Odrot there is 5 shares of Safari, that's what I buy, because I'm paying cheap, around 100 bob. If I do like 100 transactions of 5 shares, I already have 500 shares of Safaricom, which will give me dividend. So with 2,000, I know most of us will say 240, then a small dividend. No, you can get out with 2 million. If you are investing that dividend back, you buy more shares that are giving dividend. That's how you grow your portfolio. Why? When you have these 240,000, let's say of Safaricom shares, if you have some number of shares which are giving you now very huge dividend at that point, you don't even need to withdraw. Leave it there. Let that dividend now. I would estimate maybe if you're around 30 years, you'll be 40. Don't even try to withdraw. Target another 10 years, 50. Target another 10 years, you have retired. At 60, you can come out with a stock of 10 million. Huh? This 10 million is giving you dividend. In your retirement, you don't need to sell. So you'll be using your dividend to take care of yourself in your retirement. Then you pass this 10 million to your children. Remember, it's the same thing. You can put 2,000 in stock market, 2,000 in pension. So that when you're retiring, you have multiple sources of income. When we go to fractional shares, you can use these 2,000 to buy international stocks, fractional shares. So how much do you recommend to start investing internationally? Right now, we are starting with 100,000, or in dollars around $1,000 for physical shares. But when you go to fractional shares, there will be no minimum. This is just to manage costs. Remember, there is also our cost to manage these assets, which you are not paying, that's who are paying. What platform would you recommend for investing in international stocks and ETFs, considering ease of sign-up and dividend payments for foreigners? So for foreigners, do not recommend you go through Kenyan platforms, because most of them, they actually decline your application because of tax. But one of them, if you're outside, is you can check Robinhood. I think they do trading. Let me just check whether they do trading. Yeah, they do. There is also Scoop International. Scope International. Maybe you may know them as a rotoscope. Huh? And I would advise, if it was me, I would go with the Scope. Huh? Don't ask why. Scope International. Yeah, just check for them. Huh? But again, check in your country which broker you have available to offer international stocks. But if you are Kenyan, just go through ARK Access. We are making it simple for you. The account you have opened for CDSC in NSE, the one you trade with at NSE, it's the same one we are using. The only thing we require you, if you open the digital account, provide full KYC. That is, you fill manual forms, and you fill in addition to that your W8BN form. All details are not shared outside. They remain at AIB. You are not sharing with anyone. That's why I said, don't worry about tax. It is already taken care of. Huh? If you're in outside country, maybe you're a foreigner, just check within your country. Again, never put your investment outside your country. Reclaiming it back if there is any issue between your country and the country that you are trading in. Trust me, getting your returns back, it's very hectic. Huh? For those who have dealt with international brokers, they know. They can close your account cheap and you can't get your money back. But if it is a local stockbroker who are offering that service, you can always walk to their offices. And as I said, EIB access we are just here at Westchurch, the Promenade along General Madege, 5th floor. Can you highlight 3 factors to consider when selecting stock that can help avoid poor stocks and secure good stocks? One of them is company performance, whether they are making profit or loss, because that is straight. If it is a profit, they will give you a dividend. Also check their dividend history. Do they give dividends frequently, or they give you once, then they keep quiet? Third, corporate governance in that company. Are there fights, audit issues? If there are audit issues, as I said, there is a presentation I will share. It covers these factors that you consider when buying a stock or when to sell. There are so many, but there are those basics that can trigger you either to buy or not to sell. So if you see there are issues or there are red signals or red flags in that company, don't even try to buy. A good example, let me come to Kenyan market, Mumias. Sometime back when it was in NSE, it stopped giving dividends. That was a direct signal this company has issues. Then we saw politics come in. Farmers stopped giving sugarcane to them. What happened? That signals something. Operation of this company may go down. Eventually, what happened in long term? They were suspended from trading. Again, look TransCentury. Again, rumors started on social media, then it became true. They have a fight with Equity. Eventually, that case went to court. If somebody wanted to get in and they realized there is already a court case, you don't even start to get into that stock because it can be suspended anytime. So you wait for those issues to be sorted, then after that you make the decision. So there are so many other factors, or even management. You check out the management, how they are doing, and very important, what they do. Remember, you want to buy a company, you know what it does, so that you can follow their news. If they are doing innovations, you're always on news to check what else are they bringing. That signals growth. So those are some of the factors you check. Another one is thank you. Hopefully I will be able to navigate the site you shared. If you're not able to do it next Friday again, I'll come through it. And again, as I promised, I'll do an Excel spreadsheet, which I'll be updating frequently with stocks that are giving dividend, and also with some recommendation. If you are to get this dividend, what stock to target next, so that you get dividend. I want to make your investment a bit easy. Which is the minimum amount should one have to start investing using EIB for international stocks? It's 100,000 or $1,000 for now. But once we go to DigiTrader, there will be no minimum. Please confirm if this scenario is real. If I buy stock at 50 today on book closure date, then tomorrow the same stock is trading at 45 and I sell it. If the company is to pay its shareholder a dividend of 1 shilling, then I would make loss. Let's just do simple mathematics. You bought at 50, you sold at 48, you have lost 2 bob. But this stock, unfortunately, it didn't say the number of shares. If you say the number of shares, let's say you bought 1 share, then you're multiplying by your dividend 1, so you made 1 bob. So there is a loss of 1 bob. But if you had 100 shares that you bought at 50, then you're multiplying your 100 times 1, you made 100 minus the 2 bob, it comes to 98 Kenya shillings. So it all depends on the number of shares. So if you said like I bought 5 stocks, then you'll be able to tell the dividend. But from what I can see, you're assuming it is 1 share. So you have already lost 1 shilling. But then for dividend stocks, never sell unless you need that money. I wish to know what will happen to TCL following suspension. CMA will give direction based on court ruling. So you just wait for, if you have shares, there is nothing you can do right now. So need to wait for CMA. If CMA says investor get paid, please follow up until you get your payment. Make sure you follow with whatever CMA they will say. Disturb them until you get your payment. If they say the counter is coming back, it comes back. Just wait for 1 day, 2 days, see the price movement. If you see another signal, you can sell. But again, TCR, I think there is some money they are following up from that court case. If it goes against them, remember they lose, they will not give dividend. If they win and they get that money, they might decide to give dividend. So that's why you need to wait and see CMA what they will say. And the court will have declared their position before even CMA. So be on the lookout, and also be on our social media and also on our WhatsApp and Telegram group. Those are groups. They are on our website. The links are on our website. The other question is, scope markets are a good broker for international stocks. Okay, that is if you are outside country. Fractional shares means I can buy stock worth 1,000 for international markets. Actually, you are owning a fraction of a share. If it is NVIDIA, you are buying a quarter of it. So you multiply with the price. So that's what you pay. So they allow you to buy expensive stocks at a lower price. How do I invest international stocks and ETF from AIB platform? This is not yet there. What we are doing, we are receiving the same way we started with NSE, where we used to receive manual orders as we wait for our platform to be integrated. We are working on that. I'm actually the one leading on that. Once we are done with the integration, you'll be able now to buy from the platform. Right now, it can be on email or through my WhatsApp. But email is the best because of records. We need records. SKRO, which is this stock? In NSE Nairobi. But it will be listing. It's not yet listed. And the SME sector. So this maybe you can check our research recommendation. I don't want to preempt maybe they have not released that information out. Just check on our on our WhatsApp group. It is to be listed. Maybe you can wait. If it is through IPO, you can get in. But again, first of all, know what they do to understand whether it's a strong company. Then check their financials, whether they have been making profits. There were some claims that Kenya government would sell its stake on Safaricom. What should we expect for the stock after government sale? I don't think there is anything that will happen. I don't foresee anything happening. What they are doing, they are frauding their shares. They get their money back. Then you continue trading. Only be worried where a stock will be delisted. I don't think Safaricom is a big brand. I would be only worried if Safaricom and M-Pesa splits. Because what does Safaricom offer? It's only internet and calling. These days, how many times do you call with your phone? Everybody is on WhatsApp. You only need internet. We have Wi-Fi across, even free Wi-Fi's. So Safaricom, I would only be worried there because Safaricom is supported mostly by M-Pesa. It's not data and it is not calls. Because everybody these days, you either call through WhatsApp or you text via WhatsApp. It is free. Internet, you only put your data when you don't have access to Wi-Fi. Every matatu these days, unless most of them stopped, most of them, they usually give you free Wi-Fi. By the time you're reaching home, you have your Wi-Fi. In town, there is a Wi-Fi hotspot. So you'd now see where Safaricom would be if they were to split with M-Pesa. If that can't happen, then I don't think government getting out, you need to be worried a lot. But if there is anything to happen, just check our research. They will give their verdict. And KPR listing, I hope this is Kenya Pipeline listing. If you have any information, right now I don't have any information on it, but again, just check its financial performance, whether they'll be making profit or loss, and also check whether they have any innovations they are doing, because those are the ones that drive prices. I don't know whether there is any other question. Let me see on Q&A. I don't understand where about mutual funds. Can you display? I'm coming to that. Not a question, but can we see the face of our... Okay. I think I've never put my face. Though I didn't want to do that. At least now you have that face. It's maybe somebody you have met out there. Clarify what is happening there in stock screener. I can see some stock prices are higher than target price. Mostly, if you find target price is higher than lower, I hope that's what you mean, than the stock price. It means they are trying to tell the people who are in that stock to buy, to sell. You don't need to buy, because then the stock have already surpassed that price. Or you find this is a recommendation that was done a long time ago, before the price reached the target. So maybe yesterday it overshoot that target price. That could also be another issue. Like in NSE, do we get to see interested buyers and sellers with their offers in ETFs? ETFs and shares trade the same way. You will see the market depth and bid and ask side. When we go to DJ Trader, even on those sites, you'll be able to see that. ETFs and shares don't trade separately. They trade on the same platform. Just the same way in NSE, you have shares and Absa Gold trading on the same platform. They don't trade separately. They are listed in the same screen. You see all the details for ETFs. So let me go back to mutual funds. Allow me to turn off because of latency. Let me turn off camera a bit. So that you can hear me. Let's go to mutual funds. Maybe what is not clear is the difference between exchange traded funds, that ETFs, and mutual funds. ETFs, we said it is a basket of stocks that trade in NSE. Mutual funds, again, it could be a collection of stocks, but they don't trade in NSE. They are bought by asset managers, that is fund managers. They are the ones trading those stocks. So ideally what you're doing in mutual funds, you put your money into one account. So the fund manager will take the total, go and invest either in shares, fixed income, maybe rentals. They could also do international stocks and many other assets. It's them who decide on where to put that money. Remember, your money is in a collection. You don't dictate what will be bought. It's them who do that. Then you have agreed, that's why it's called mutual. You have agreed at the end of the period of my investment, give me a return. So these terms are straightforward. Mutual, you have agreed. What funds? You invest my money somewhere, give me return. So you and your friends or other investors whom you may not know, you have deposited money, let's say in Apollo Assets Management, their fund manager. You have put your money in one collection. Then they take that money, come to MSE and buy shares. Whether dividend is declared, you never know, because you don't even know they invested in what stocks. It's them who went and invested. Then dividend comes in, they sell at a profit. They calculate this dividend plus the profit they have made and give you the return that you agreed. And they charge a small fee. That's what is called mutual funds. ETFs is the same thing, but here it is you buying directly. Remember the fund manager here, we go back to the mutual funds, they decide, instead of offloading our fund, we sell everything to pay just Peter out of the phrase, let's list it at NSE to start trading. So that when Peter wants to get out, we don't go and start selling all our stocks. Remember, they have to sell all stocks to pay if it is mutual funds. So in ETFs, it will be listed at NSE, it starts trading. If Peter wants to get out alone, he will sell his portion, and another person buys his portion, gets into that ETF, into that fund. So Peter's money is withdrawn from the fund, is given, then another person money is put in. So the fund manager doesn't need to offload the whole fund from trading, as compared to mutual funds. I hope that is clear now. And ETFs automatically track themselves through the index. For mutual funds, it is manual. It's done by fund managers. That's why they allocate interest daily at the end of the day. Maybe they have touched something. I think in M-Pesa we used to have a fund. I don't remember the name. That fund, the way they tell you, will give you interest daily. That's what they do. They invest, get returns. That return they share with you, they post it as an interest. But you never know what they bought. ETF, you actually know I'm buying this ETF SPY. Within that SPY, it has these stocks or these bonds. So that is the difference. Mutual funds, you never know. It's the money you put in a collection account they invest. ETFs, you're actually buying the underlying stocks that are within that ETF. I hope I've answered your question. Let's go back to Q&A. I hope the person who had asked to see me, you have seen my face. I didn't clarify what is happening there in stock screener. Let me share. In the stock screener, this is where you can see the stocks. You can see around 5,495 stocks. You have the SABO in the company that is trading. If it is NVIDIA, you have it SABO. So when you are buying, you only need to tell us the SABO and the name of the counter. Then you have market capitalization. Is the total number of shares listed times current price. Then rating. Rating is whether the research analysts based globally, they are not on stock analysis website, what they are telling you to do with that stock, whether it's a buy or a strong buy. A strong buy means it is a stock you can buy. And you can tell the number of analysts who have given that recommendation to know whether it is a genuine recommendation. If your recommendation have one or two, like all these, you see there are no people recommending, then you don't want to get in those stocks. You don't even want to think about them, because why are they not giving? But then it could be a new stock which is listed. You need to take that. Then it gives you the current price, closing price of yesterday. Then the price target. Whatever analysts have done, they're telling you if you buy your stock at this price, you can always exit or sell at this price. So price target tells you the price that when the stock reaches that price, you can sell. But does that mean you sell? No. The last column is just a percentage between price target and stock price. Like these ones which have a negative, it may mean this current price overshot the target price. That means the people who wanted to sell Meta and they were told to sell when 704, they can either now decide to sell because they have reached their target price. Maybe this was put when Meta was below 704, maybe around 600. So that's why it is less than price target. It means yesterday it overshot. the current target price. I hope that is clear. And if it's not clear, always ask. And I think you can add other indicators. You can add more details here if you want. It's only that I didn't want to make it complicated. There are so many screens here, even exchange, because you need exchange. These, make sure you add exchange, so that when you're giving order, let me first add these. Last dividend, you can see even last dividend growth. Let's add a few. Price to change, this one we don't need. All these we don't need unless you're doing technical analysis. Open price high, these ones you don't need. There's also pre-market. Pre-market, it's what is happening before market opens. Remember in US, market trades like 24 hours. There's pre-market where there's no lot of trades happening. You won't even notice. Then there's during market and there's after market. It continues trading, but in raw volumes. In US, that's how it works. Then there's IPO date. That one, if you want to know when it listed. There are so many. I don't want to go through all this. Let me see at the end. Let's scroll to this side. So what you need is exchange. I hope I can drag. You see, you can drag. You bring it to where there is Sable. Hopefully it has dragged to that point. Let's drag here where there is name. So you need, when you're doing the order, you need the Sable, name, and exchange. That's the only thing you give us, and the price. These others are just to help you. Like now you can tell whether the counter is giving dividend and the last dividend they gave. So all those details you can add. So I hope now stock screener is clear. What's your opinion on Umeme? I didn't want to go into details of this, but since you have asked the question, they are giving dividend, and I know most of us may not understand that dividend of 222, why they are giving that dividend. It is in Uganda shillings, so don't be tempted to look at the 222. If you convert to Kenya shillings, it's around 8 Kenya shillings. So what you do, you compare different stocks. Safaricom, they are giving you a dividend of 0.65. You have Umeme, which is giving you 8. And let's say another counter is giving you a dividend of 15. You only need to check price. Safaricom, maybe it's at 22. Umeme, if you are to buy, maybe it is trading at 25. Then this counter is giving you dividend of 15. It's trading at 140 Kenya shillings. We are talking about Kenya shillings. So Safaricom, if I was to get a good dividend, let's take with the highest, 15 dividend. If I need to be paid 15,000, I need to buy 1,000 shares of that counter. So I would pay 140,000 because it is 140 price of the counter, like the number of shares, to get 15,000. Then for Umeme, price is 25. So I use 25,000 to get a dividend of 8,000 because dividend is 80 bob. Safaricom, I'll pay 22,000 to get a dividend of 0.65 times 1,000. That is 650. So it's due to make mathematics look real. You use 22,000 to get 650 bob. Or do you want to use 25,000 to get 8,000? Or do you want to pay a valued counter of 140,000 to get 15,000? You also check your pocket. So for me, I would go for Umeme because I'm paying 25,000 to get 8,000. Then use these 8,000 to buy Safaricom maybe, which will give me now that 650. That's what I said, dividend recycling. You check Umeme, what is the book closure? Let me buy 1,000. I'll buy with 25,000, no? When are they paying? Maybe they are paying 14th July. When is book closure for Safaricom? It is on 31st July. So I can be paid on 14th July by Umeme and by Safaricom. Even add more on the 8,000 dividend to get more Safaricom and get a higher dividend. So that's how you work it out. It is based on your pocket. How much are you willing to pay? And how much dividend are you willing to receive? This I'll go through it next Wednesday. I want to prepare that spreadsheet that explains now what I've explained offline, so that you can see how you play around with dividend and what decisions you can make by comparing different stocks and the dividend they are giving you, so that you know whether it is also making sense. Buying Safaricom right now is giving you 650. I better put this in a money market fund. But if I put on Umeme 8,000 in a few days, I would even go for it. Then I decide, do I want to sell after dividend? If I decide I want to sell, I will sell on X dividend date before the prices go down. But why would I sell a counter if they have been giving dividend frequently? The other question, I think we are on Umeme. Later, NSE announced future trading on some securities. Still didn't understand. Can you explain? This is on derivatives. We are not currently doing it. It's where you are speculating on the price of a underlying stock. AIB, we stopped offering this, so I may not be able to give you details right now. But derivatives is where you buy a stock today and you anticipate in future price it will appreciate, then you sell. Or when you sell today, anticipating the price will rise in future. That's how derivatives work. But you're not owning the stock. It is risky in one way. You can lose money. And I think you also need to interrogate broker platforms before you get into futures, so that you don't lose money when you could have put that money elsewhere. Derivatives requires a full training. You understand it, then when you're getting in, make sure you are following the derivatives market daily to know whether you are making more money, because there is something called margin call. It's something you'd hate to get. You have already put your 100,000, but way down the line, broker calls you and tells you, by the way, your positions have gone against the market. You need to top up with 20,000. This 20,000 you are not investing. It's a margin call to cater for the shortfall in your investment. Remember, it is real time. This 20,000, when you're selling your derivatives, you might forget to factor it. You paid 120,000. Then you are getting back maybe 100,000. You see, you forgot you had another margin call. Even if you get interest, still there are so many technicalities about derivatives. Always talk to a research or a derivatives trader. They first take you full training on derivatives. So after investing in international market with minimum, what is the required top up? It is if you put 100,000, again the next one it can be more than 100,000. Again, we are going in multiples of 100,000, but it's only for a few months before you come to fractional shares. I hope, Christine, that is clear. So the next one, you can put 100,000 or more. Remember, you're building your portfolio. And the reason is, the lower the amount, the higher the risks you are taking. So AIB is also taking a risk on bank charges and transfers and conversion. But once we go to fractional shares, there will be no minimum. Hopefully by September, I'll be done with it and it is live. But for those who have already invested, they already know what you're making. The presentation was well delivered. At least now I have knowledge on international. Thank you, Moses. And I'll be sharing, I forgot to share the previous recordings for international stocks. I'll be uploading on YouTube channel, my YouTube channel. Then I'll share that link on that WhatsApp channel. They are not on AIB YouTube channel for one reason. You noticed I'm using my personal details to train you. If I left AIB tomorrow, I'll be left with my personal details, which somebody else can use to trade. I don't want to leave. I want my personal details to be somewhere I can control. But in terms of training, you are free to get in touch. WhatsApp. If you need a call, if you need to visit our office, everything is free. No charge. YouTube channel is, let me share a link. It's called Jantasad Studio. It has also other trainings, but focus on NSE and international markets. Huh? But join that WhatsApp channel. If you join that WhatsApp channel, I'll be sharing everything. But also let me share that link to the channel. I will go to playlists. Let me see, because it has also other circles, pensions, and others. You may not be interested in those. Yours is international market. Let me see. There's a playlist called Wealth Guide. It's the one I'm looking for. It's this one. So this is the number you can reach me in terms of international stocks and NSE trading. I know on that channel you see another number. It's also my number, but that handles the rest of the trainings. But you can also reach out through that number if I'm not available on the other number. If there is no other questions, I'll also be coming live on TikTok. Maybe over the weekend, because I know that's when most of us are usually free, but I will communicate on our channels and also social media so that we also help people run. We want you to run and invest. This information, if I don't give you, then you might not find out there. And I think most of people, they might ask for a charge. We don't charge. I don't charge. We don't charge. We is AIB Access. You are free to walk in the office anytime. Don't even book an appointment. Just walk to our office. There is our reception. I want somebody who can take me through this 1, 2, 3. Or if you want to see somebody specific, Peter or customer care manager, if they don't have a client, they'll come and see you and help you. Weekends, chat me on WhatsApp, whatever you need. Maybe you didn't understand the point. If I need to connect, I'll share a Teams link with you. I take you through until you understand. We want to empower you so that you trade. With that, I want to thank you for finding time to come. And let's meet next Wednesday. And also Friday. Wednesday is NSE. Friday is international markets. Thank you so much and have a nice weekend.